In 2025, the world of cryptocurrency looks drastically different from what it was just a few years ago. What began as a niche movement led by Bitcoin enthusiasts has now matured into a massive financial ecosystem influencing everything from banking and tech to art and politics. But despite its rapid evolution, one big question still looms for new and seasoned investors alike. Is crypto still worth investing in? The answer isn't black and white. The truth lies in understanding what has changed, what remains promising, and what risks continue to hover over the space. Today we will talk about crypto in 2025. Is it still worth investing? So before we start, make sure to hit the like button and subscribe to my channel. The maturity of the market. By 2025, the crypto market has grown far beyond Bitcoin and Ethereum. Layer 2 scaling solutions, institutional investors, and real-world blockchain applications have helped stabilize what used to be a highly speculative market. Regulatory clarity has also improved in many regions, particularly in the US, the EU, and parts of Asia, giving crypto more legitimacy and security. Major players like BlackRock, Fidelity, and even pension funds now have crypto exposure, either directly through assets or indirectly via ETFs and blockchain infrastructure investments. The early Wild West days may be over, but the market's increasing maturity has opened the door for long-term sustainable growth. Bitcoin and Ethereum, still kings of the hill. Even with thousands of new coins and tokens on the market, Bitcoin, BTC, and Ethereum, ETH, continue to dominate. Bitcoin remains the go-to asset for digital gold, often viewed as a hedge against inflation and fiat devaluation. In 2025, BTC has stabilized in the eyes of institutional investors, with fewer dramatic price swings than in its early years. Ethereum, on the other hand, has entrenched itself as the foundation of Web3. With Ethereum 2.0 fully implemented, it now handles far more transactions per second, with drastically reduced gas fees. Developers continue to build dApps, decentralized applications, smart contracts, and NFTs on Ethereum's blockchain, making it the core of decentralized finance DeFi. Altcoins and emerging projects. Beyond BTC and ETH, 2025 has seen the rise of several altcoins and blockchain projects solving real-world problems. Solana, Cardano, Polkadot, and Avalanche have matured and carved out niches in areas like DeFi, gaming, and cross-chain interoperability. Projects like Chainlink and Arweave have gained traction by offering decentralized oracles and permanent data storage. Meanwhile, newer entrants focusing on AI integration, tokenized real-world assets like real estate or art, and supply chain transparency are gaining investor interest. While the hype cycles still exist, more projects today are delivering real utility, which marks a significant shift from the meme coin mania of the early 2020s. Regulation, friend or foe? Regulation in 2025 is no longer a looming threat. It's a defining feature of the crypto landscape. Governments have moved from vague warnings to concrete laws and policies. In the US, the SEC and CFTC now clearly distinguish between securities and commodities, allowing certain coins to be traded legally on public exchanges. Meanwhile, TOAC, Know Your Customer, and AML, anti-money laundering, regulations are enforced across most major platforms. While some see this as a loss of decentralization, it has reduced scams, stabilized markets, and invited mainstream adoption. Countries like the UAE, Singapore, and Switzerland have emerged as crypto-friendly hubs, while others like China continue to enforce strict bans. For investors, this means navigating regulation is now just as important as technical analysis. NFTs and Web3 in 2025. Although the NFT boom of 2021 seemed short-lived, it planted seeds that are now bearing fruit. In 2025, NFTs aren't just about digital art. They're about digital ownership. Real estate, music royalties, intellectual property rights, and even event tickets are now being tokenized and sold as NFTs. Web3, the decentralized internet built on blockchain technology, is gaining real momentum. Projects like Lens Protocol and Farcaster are leading the next evolution of social media, where users own their data and monetize their content. This evolution has created new investment opportunities, not just in coins, but in platforms and ecosystems. If Web3 continues to grow, investing in its infrastructure today could be like buying into the internet in 1995. The rise of central bank digital currencies (CBDCs). One of the most significant changes in 2025 is the rise of CBDCs, central bank digital currencies issued by governments. Countries like China, India, and several EU nations now run pilot or full-scale CBDC programs. While these digital currencies are not decentralized like Bitcoin, they bring blockchain-like efficiency to fiat systems. But they also raise privacy concerns. CBDCs could compete with stablecoins like USDT and USDC, which have become essential in crypto trading. As CBDCs gain traction, they might influence investor behavior, push more crypto exchanges to comply with regulations, and shape how money moves globally. Investors should watch CBDC developments closely as they can affect liquidity, trading volume, and even monetary policy. Risks and volatility still exist. Despite all the growth and regulation, crypto is still risky. Prices can swing drastically, often without warning. Hacks still happen, though they're less frequent, and rug pulls, while rarer, haven't disappeared completely. The space is highly tech-dependent, and changes in consensus algorithms, forks, or smart contract bugs can impact prices or user trust. Investors must also consider macroeconomic factors like interest rates, inflation, and global tensions, which can all affect crypto valuations. Diversification, cold wallet storage, and ongoing research are essential for managing risk. In 2025, crypto is no longer just for gamblers, but it's not a set-it-and-forget-it investment either. Is it still worth investing? So, is crypto still worth investing in 2025? Yes, but with strategy, education, and realism. It's no longer a get-rich-quick scheme. It's a space that rewards those who understand the tech, the trends, and the economics. The most successful crypto investors in 2025 are those who balance their portfolios, dollar cost average (DCA) into solid assets, and stay updated with the industry. Long gone are the days of blind echo dealing or FOMO buying. If you're just starting, begin with learning, not trading. Use testnets, read white papers, follow crypto analysts, and invest only what you're prepared to lose. How AI and blockchain are converging in 2025. One of the most exciting developments in 2025 is the intersection between artificial intelligence (AI) and blockchain technology. Decentralized AI protocols are being built on-chain to power data marketplaces, autonomous agents, and algorithmic financial systems. For example, platforms like Fetch.ai and Ocean Protocol are enabling users to buy, sell, and monetize data or AI models without middlemen. This opens doors to new use cases like AI-driven investment bots that operate transparently on smart contracts, ensuring fairness and traceability. For crypto investors, this convergence means identifying blockchain projects that integrate with AI could represent the next wave of exponential growth. It also signals that crypto is no longer just about currency. It's becoming the infrastructure for tomorrow's tech economy. Crypto earning versus investing. A shift in mentality. In 2025, people are realizing that they don't have to only invest in crypto. They can also earn it. With platforms like Play to Earn, P2E, games, Learn to Earn platforms, and DeFi staking, users can generate passive income in crypto without putting in large sums of cash upfront. Platforms such as Coinbase Earn, Rabbit Hole, and Layer 3 reward users for completing educational tasks, while decentralized finance tools let users lend, stake, or provide liquidity in exchange for interest or tokens. There's also a rise in contributor-based DAOs, decentralized autonomous organizations, where users get paid in governance tokens for their time, work, or participation. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.